Hey everyone, it's PSK2329. I just wanted to, first of all, start off by thanking everyone for all the kind words and support on Twitter. I really appreciate everything everybody said. It's been more than I expected. I'm very humbled, very honored. It's definitely been a lot of work and a lot of time, energy, effort put into this, and it's now becoming reality. So I'm really excited, and hopefully I can share some good things with you guys today that will help you overall. And I'm going to just talk a little bit about my journey, and keep in mind everything that I'm going to share with you today is all my opinion on what worked for me. Doesn't necessarily mean it's going to work for you, but hopefully you'll be able to gain a few things out of it and walk away with a couple tips and watch the video again down the road. But I'm actually showing you a live trade of Apple right now. I'm not actually in the trade, but Apple reports earnings tonight, and I'm just going to talk about a few things at the end when it comes to this. It kind of been lull of the day, so thought now would be a good time to do the video. First of all, I just want to start off with the no shortcuts. When it comes to trading, there's no shortcuts, and the number one question I'm getting asked all the time is, how did I do it so quickly? Well, to me, my journey's been a year and just coming up on a year and 6 months now. I don't think that's quick. I mean, some people that have been trading years and years may think it's quick, but to me, that's not quick. I mean, a year and 6 months is longer than I anticipated it taking for me to turn this corner and get to the level I'm at. But the one thing I can tell you, and what people don't see, is all the time and energy I've put in behind the scenes. I've literally put in thousands and thousands and thousands of hours of watching videos over and over, 3, 4, 5, 6, 7 times, just staring at the screen day in and day out, just watching how a stock moves and how stock moves in general, and based on, is it a big cap, small cap? Is it, is it a FANG stock? Is it Wall Street favorite? Is it a low float runner? Is it a biotech? And analyzing the news and why it moved, and then reviewing how it moved and why it did what it did, and looking at the short interest. I mean, just looking at the entire big picture. And all I can tell you is that there is no shortcuts in this. Spoiler alert, I don't mean to burst anybody's bubble, but there is no shortcuts in this. You just have to put in the time and energy and the effort. Nobody is born a trader. Traders are built. I mean, there's nobody's born to be a trader. There's people that are born differently physically that are make them a better athlete. Well, I'm sorry, but there's nothing that's going to help you be a trader. Maybe your personality with your patience and things like that. But I know the other thing is that everybody wants to get rich quick. I understand that's why we get into trading. I understand that there's a ton of money to be made in trading, but trading is a journey. It is a process. And if you're in this just to get rich quick, you should probably just close your account and walk away and do something else, because you're probably going to end up losing it all by not doing the correct things, and you end up blowing them up if you haven't already. Because there's no shortcuts, there's no get rich quick schemes. There's nothing you can do but just put in the time and effort to learn and understand trading and become a better trader. And I think with all of that, I think it is good to take your lumps. I think it is good to get beat up and beat down sometimes, or get high and low, because the discipline is what is going to come out of it. And if I can give you anything, the number one thing you need to focus on, and what really helped me, was really, really mastering my discipline. And what do I mean by that? Well, I wrote down a few things that I'll go over with you and just kind of share with you. So here are some of my rules and things that I'm writing down that I'm following. And as you can see, the number one rule I have is no trend equals no trade. So the reason I have this rule is it's helping me avoid these times of day between, say, like noon and 2, or 11:30 and 2:30, where volume really gets light, the market gets really choppy, stocks move sporadically, they don't necessarily follow a pattern all the time. But if there's not a trend, then I don't take a trade. So you can see with Apple, if I draw a trend line on Apple, Apple is actually on a nice uptrend. And this is all you have to do to really help with your discipline, is just start drawing lines. And you can move them around, you can do what you want with them. But, as long as Apple is on this trend, if I'm in the trade from say here or here, then there's no reason for me to get out of it. On these pullbacks, you could consider that consolidation or whatever you want, but it really has not broke its uptrend. And the more you start drawing these, the more you'll just see them. You don't even necessarily have to draw lines all the time. So that's what I mean by no trend and no trade. It either needs to be going up or down, but it needs to be on some sort of trend. The other thing is wait for confirmation to enter and exit. Use pullbacks and pushes higher low to sell into or scale out or buy into. And what I mean by wait for confirmation is if a stock opens weak, like it is here, wait till it actually bases, double bottoms, curls, starts setting in higher lows before you actually get into the trade. Because the other big mistake I see people make, and this is something, everything I'm telling you about is stuff I was guilty of, is people try to anticipate. So what does anticipate mean? To believe in the future occurrence. Well, last I checked, nobody can really predict the future. So unless you can predict the future of the stock, it's probably better just to wait for confirmation. So, and what I mean, and I don't mean that to be in a negative way. I mean it to be more of like a reality gut check. Like stop and trying to anticipate what the stock is going to do, because you're probably going to be wrong more than you're going to be right unless you've got, years of experience doing this and you trade the same ticker over and over and over. I mean, I know people that just trade Apple all day or Amazon or Google or something like that all day, and they know exactly how it's going to work. That's different. You can anticipate a little there, but I'm sure even those people that anticipate still wait for some sort of confirmation to get in or out of the trade, and they have their losses set or their stop losses set pretty tight. So wait for confirmation. Number 3, have a plan for every trade. When your plan doesn't work, cut it and move on. I see so many people, especially that in the group I trade with, that just kind of keep holding on and they keep talking about this stock. And they're like, well, maybe it'll come back or maybe it'll do this. And meanwhile, they're just getting run over in the position, or they just, somebody said something in a chat room and they just hop in the trade. They don't really have a plan. You need to have a plan for every trade you enter. You should not be clicking the button if you do not have a plan. If you don't know the risk reward, if you don't know support and resistance, if you don't know how much room it has to go, if you don't know why it's moving, you should not be in the trade. But if your plan, and you can have a plan and it may work 99 out of 100 times, but that one time it doesn't work, you need to cut it off and then move on. If you're staring at a stock and it's just going sideways and it's not breaking out, not breaking down, not doing what you thought it was going to do, just move on. There's so many other stocks out there to trade. Number 4, lock in profits into support and resistance. And this has become huge, especially the past few weeks or month, when you start talking about all of the choppiness that we've seen in the market. I mean, this is exactly how you needed to be playing it every single day. So you can see here I have support and resistance lines, these green, red, and blue lines. Every time a stock is going to either break out or break down, I'm going to be selling chunks into these lines. Even if you look at like the hourly, I mean, you can just see how the stock acts around these lines. I mean, look at this. It's just bouncing off of them constantly. Here, 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 here. So every time, if I'm in, say, I'm in a day trade, Apple's got a lot more room today, but if I go back and look at the hourly chart, I'm assuming this 168 is some sort of resistance somewhere on the chart. and come back here, you could say, yeah, you could say there was some resistance here. But this is what I mean. You want to be selling into these resistance, and not necessarily all your position, but at least some of it, making sure you're locking in, because it may bounce right off here and then just head straight down. So make sure that you're selling into support and resistance. Make sure you know what they are. Number 5, know what you're trading. Don't enter any trade. Like I was just saying, don't enter anything without a plan, but know what you're trading. Know if it's an ETF, know if it's an ADR, know if it's just a normal ticker. Know what you're trading. Don't get into UVXY if you don't understand what it is and how it moves and how it operates and what the catalyst behind it is. So those are the rules that I have developed for myself and that I follow. And the more I stick to them, the more success I have. So above all, these have helped create my discipline. It's also helped create my patience, because if I'm waiting for confirmation to enter and exit a trade and I'm following trend lines like I've just drew on Apple, it's easy to have patience, because I know what the big move is. I understand the big move. I understand the big picture. I know what I'm going for in the trade. I know what it has room to. I know that I have my set price targets on it based on support and resistance, or based on analyst upgrades. I have a plan. But discipline is, in my opinion, what is making people great versus holding them back, or why they're having failures in the beginning. If you're having trouble, my guess is it's because you're not disciplined enough. You're trying to make the money too fast. And that leads me to my next point, which is you should have a daily goal. It is good to have a number in your head to say, okay, this is what I would like to make consistently on a daily basis. But it should be just a goal, not an expectation. Because I think if you have it as an expectation, you're going to be pushing yourself to take trades or do trades that maybe you shouldn't be. And what I mean by that is, like, if you're like, hey, I need to make $1,000 a day. Well, you're going to be just sitting there going, okay, I need to trade something. I need to trade something. I need to trade something. Find me something to trade. And you're going to end up entering and exiting a trade, and then you're going to choke it and probably end up for a loss because you wanted to make the money. It's all about the money. And it can't be like that. It has to be about the chart, the setup, and all these other things I was talking about in my rules. But you do need to prove to yourself that you can make X amount a day if you want to be a consistent full-time trader. Next guideline, don't be a hindsight trader. Learn from your failures. I don't look at any loss as a loss. I look at it as a learning opportunity. If I'm going to learn and keep getting better, and I want to make this a career, then I need to understand what I did wrong. And it doesn't mean that you're bad or that you're dumb or you're not going to get this. It just means that you didn't understand the move, or you just made some mistakes. And what were those mistakes? And this is how I created all my rules, is because I kept making those mistakes, and I'm like, why am I doing this? So I started documenting it, and it was because I was doing a lot of anticipation. I was trading when there was no trend. I was like, oh, I think it's going to do this, or I think it's going this direction. Nope, it goes the other way. I wasn't locking in profits into support and resistance. I didn't understand that stuff. I didn't understand my risk reward as well as I do now. And I think that stuff just comes with time, which is why I say this is not a get rich or there's no shortcuts. This stuff just takes time. But don't be a hindsight trader. Don't sit there after every time you enter and exit a trade and be like, oh, I should have stayed, or I should have done this, or I woulda, shoulda, coulda. Don't worry about that. Just worry about, okay, hey, it went to here. Okay, why did it go to here? Okay, now I know next time that I can do this. Same thing with the next bullet point. If you take a loss, forget about it. Move on. You learn to get over it. You cannot dwell on it. You can't be a hindsight trader. You have to be able to just swallow it, move on, and then review it later at the end of the day. Like, okay, what did I do wrong? Where can I improve for the next time? That's going to help you tremendously speed up your learning curve. And then have a short memory on both sides, both losses and wins. Don't during the day, I try not to get too high or too low. I just try to stay focused, just not focused on my P&L. I'm focused on what is the charts doing, what are my setups. And I know it sounds kind of robotic, but you can celebrate your big day at the end of the day. Enjoy it with a beer or a glass of wine or whatever you want to do, or celebrate, just go out for dinner. But don't get too caught up in the emotions throughout the day, because one of the things that's going to happen as you develop these rules or develop your own rules and you have better discipline is you'll be able to keep your emotions in check. It'll be a lot less emotion in the trade, which is, I'm not saying you have to be a robot, but you have to be able to keep your emotions in check, because your emotions are going to play with your patience. If you're too emotional in the trade, you're going to choke it, or you're not going to have enough patience, or you're not going to let it do what it needs to do. And every little bump and jump it makes, it's going to pull you out. So, when it comes to waiting for confirmation and following trends, I'm not trying to be top tick Tommy and bottom tick Bobby. I don't make the best entrance and exits still. I can still get better at what I'm doing, and that's the goal, is to just keep getting better and better and better and better. The other thing is understanding both the macro and the micro environment, and even understanding the macro picture. I talk about it down here, but what I mean by that is, I watch a lot of CNBC. I read a lot of things on Twitter, and it's not because I'm trying to follow anybody's advice. It's because I'm trying to hear, what are they saying about the market? What are they saying about a sector? What are they saying about an industry? What are they saying about the sentiment in the market right now? Is everybody bullish? Are they bearish? Because I want to take that and build a thesis out of it. I want to know, like, hey, everybody thinks the market is going to go down, but yet the chart is telling me we're in an uptrend. So that tells me that there could be a lot of people with short positions, and if we get any kind of buying and good volume, the market could squeeze. So that's, I'm looking for those opportunities. I'm trying to understand the market and make my own thesis and make my own big picture, because that's going to impact what I do with my trades. Like, for example, I was long Amazon into Friday's earnings because I had a feeling they were going to beat earnings, because over 85% of the companies have been beating earnings, and the tech sector has been hot. And then, Amazon also comes out with these numbers that they've got over 100 million Amazon Prime members, which was way above what everybody was expecting. And sure enough, they smash earnings. It wasn't a guess. It was a little bit of a gamble, but when I understood the market, the sentiment, the fact that the majority of companies are beating, the fact that the tech sector is crushing, just told me that my odds are that Amazon is going to beat. I even think Apple's going to beat tonight. I could be completely wrong, but, and a lot of people think that their sales are going to be light. But again, just kind of sticking with the sector sentiment, everybody's been crushing it. And Apple's actually been really, really quiet going into tonight's earnings, which makes me think that they kind of want to prove people wrong. They may prove me wrong. They may completely miss, but Apple's not that kind of company. The other thing is understanding, when you understand the market, understanding what the difference between, say, like a hard to borrow versus an easy to borrow, and what that means when the SSR is on, or you're trying to go long or short a stock. Like, just to give you a quick overview on that. Like, typically when a stock is hard to borrow, it'll tend to squeeze more likely than if it's easy to borrow. Like, if a stock is really easy to borrow and it's looking like a good short opportunity, the chances of it fading off are better than if a stock is hard to borrow. The chances are it's probably going to have a lot of squeezes in it, because everybody who's long is still holding their position, everybody's still trying to short it, and there's no shares available to short, which means any kind of buying is just going to send the stock skyrocketing. The other thing is, when I say understand the macro picture and the micro picture, is knowing kind of the behavior and psychology of other traders and what they're thinking at that exact time. For example, understand other platforms. There's a lot of people that can start trading at 6 a.m., 7 a.m., 8 a.m., But there's a lot of people that can't even short before 8 a.m. or they can't short, or to know that, hey, most retail traders don't even get to their computer till 9 a.m. Eastern time. Like for example, I have an account with Fidelity. You can't short before 8 a.m. So just knowing that kind of stuff, if you're playing pre-market between 7 and 8, at 8 o'clock, the stock may act a lot different. At 9 o'clock, the stock may act a lot different. So you might want to play with a little smaller size or exit positions before 8 or 9 o'clock. There's a lot of things that go into the overall big picture when you're considering taking a move. And then also understand the news behind it. So, I hope that will help give you guys a couple quick tips. The other thing to talk about is when you talk, I don't think I'm not skipping over risk reward. I think between patience and risk reward, those are some of the biggest things that you could focus on and that have helped me. This is a good article on Charles Schwab, just a good infographic that talks about how to establish your risk reward. I recommend people reviewing it if they want to keep getting better at their risk reward. It does a pretty good job of just kind of talking about it overall. I even just did a little blog post about it. But understanding your risk reward is going to be huge when it comes to developing your plan, because you need to know, is this trade worth taking? On top of all the other things when you're building your thesis. And when you start talking about, okay, I have a lot of questions of people asking me, okay, when did you turn the corner? What made you turn the corner? Doing all of these things and developing these rules and then following these rules are what helped me. And risk reward was a big part of that. But all of that helped make my discipline better. And I can't tell you enough. You will not become a consistent trader until you have better discipline, until you have more patience, until you realize this is not a get quick rich scheme, that it's going to take time and I just need to put in the time. My other advice is if you've been trading like a year or less and you're just getting into this, it should not be about the money. I know that's kind of counterintuitive. That's like why you get into trading, is to make a ton of money. But your first year, it should not be about the profits. It should not be about the losses. It needs to be about just learning the market, learning the trades, learning the setups, and being consistent. If you're having a ton of losses, take a week off, completely step away, clear your mind, and then get back into it. Trade with smaller size until you can have a month where you have 18 green days and 2 red days. Then you can start starting to think about the profits, and you can start actually bumping your share size up. But in the beginning, it cannot be about the money. I know that's going to be hard to digest and hard to think about, but I'm telling you, if you want to get better and you want to take the next step, and that's kind of what happened to me, is I just stopped. I completely stopped even looking at my P&L. I was just focusing on the trades. I was just focusing on the setups, and I just wanted to be consistent. And when you can start doing that and not make it about the money, you will start to turn the corner, because you will start to develop patience. You'll start to develop your own rules, because it's not about the money. You're trading the setup. You're trading the chart. And the other thing too is if you're paper trading, just trade with like a 50 or 100 shares, because paper trading to me is it's kind of like playing Monopoly. Like you're buying and selling real estate and collecting rent, but you're not actually generating any real revenue. There's no emotion involved in it. There was no real work involved in it. I see people, like I saw this guy who's got like $1 million in his paper trading account. It's like, really? You're trading with 10,000, 20,000 shares at a time. You would never do that if you had real money on the line. If you're paper trading, it cannot be about the money at all. If you're paper trading, it strictly needs to be about entering any entries, exits, setups, learning how to trade. It's not about the money. So, that's my little rant on paper trading, why I don't really believe in it. Because I paper traded for about 3 days and I'm like, this makes no sense. There's no emotion involved in it, because I had traded for a couple months. I was getting frustrated. So I'm like, I'm just going to paper trade so I don't lose any money. And then after 3 days, I'm like, this is dumb. This is nothing like real trading. But if you don't have any money and you're looking to start somewhere, paper trading's fine. Just keep your share size small so that you're not trying to set false expectations for when you actually really start trading with money. The other big thing is if you've been struggling for a long time, one of the things I did that helped me as well is when I was in awesome calls, when I'm in the chat room, I actually just took an entire week off. Like I was getting so frustrated because I thought I was doing everything correctly, but I wasn't understanding the moves as well as I thought I was. I literally just sat in the room for a week, didn't trade at all. I had my trading platform open just so I could watch, but I was literally just reading the notes, reading the setups, listening to everything the mods were saying, listening to what AJ was saying, reading all the comments. And then at the end of the day, I would go back and study all those again. And I can't tell you how much that just week of just watching and learning helped me in my next step in my trading career, because I learned so much. I became a student again, and I just studied everything over and over. And I realized, okay, here's where I'm making the mistakes. Here's where I need to get better. And again, that kind of helped me with my discipline. It also helped me just understand the moves better, both micro and macro. But you have to just study. And I'm not going to be able to say that enough. And you have to have patience. You have to give this at least a year or more, or maybe 2 to really be good at it. I mean, nothing comes from luck. It's all done through hard work. The other thing too is if you're actually going to be taking that next step and you're a newer trader, I also recommend going to like 5 or 10 minute time frames. If you're trading with a 1 minute time frame, that's probably part of the reason you're getting scared out of trades. You need to be on kind of take a step back and go to a wider time frame. That will help you develop more patience because they don't move as quickly, and you'll be able to see things start to set up better. So through 5 and 10 minute time frames, you'll actually probably start to see more success. The only reason you should be using a 1 minute is if you're already a consistent trader and you're just trying to sharpen your entries and exits, or you're trying to identify a trend. I mean, I have a 2 minute on my charts, as you can see here. But I just use this to try to identify the trend and maybe get a better entry and exit. I actually don't even really look at this that much. It's just strictly for, if it's right at the open and I'm just trying to make sure that I do see a double bottom or I do see it reversing and I'm start to identify the higher lows, or vice versa. If I see topping and I'm seeing it break down, that's really the only reason I use it for. But my guess is I also see a lot of newbies who are using a 1 minute chart and they're constantly getting in and out of trades. They're getting scared in and out. And that's part of the reason. So try a wider time frame until you get to where you're really consistent. But other than that, I don't want this to be too long of a video. You guys can follow me on Twitter, to ask me more questions, to see kind of what I'm trading, to just kind of hear what I have to say about the overall market. You can also follow my website where I have all those Twitter feeds built in. It's something I built. It's nothing special, but this is the website. I'm going to be doing blog posts when I feel there's something to share or worth sharing. I have some frequently asked questions. There's things about me. You can see I have some of the tickers I trade all the time up here all the time. This is actually an updated news feed that actually updates regularly as news comes out. It's just I have it streaming in. I'm also, obviously you've seen this video on YouTube, so you can follow the channel. I'll post videos anytime I can, or if there's something you guys want me to do a video on, please let me know. I'm more than happy to do that. But I hope you enjoyed the video. I hope, if you have more questions, feel free to ask, and I'll try to do as many videos as you guys want. And but I'm definitely going to start doing some daily recaps and talking about why I took a trade, what I saw, and so I can hopefully help teach you guys a little better. So have a great day.